G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It is the 21st of November 2018. We're winding down towards Christmas, and as we get through Thanksgiving this week, markets often thin out a little bit. The question is, has that already happened because of the carnage? When I look at the moves in stocks and I don't see dollar yen reacting, I don't see the Swiss franc reacting, I don't see gold reacting, I wonder what the colour of this market funk is. Rather than your standard market funk where people change one position and go and hedge with the other, it kind of feels like people are going to the sidelines. The trouble with that is that it can make things even thinner. Now, this is just a hypothesis. I don't know the answer yet. It's something I'm thinking about, something I wanted to start off with today because it could mean that this volatility persists. And didn't we see some volatility last night? We saw oil down over 6% in WTI and Brent terms. We saw the Nasdaq down 1.75% after a 3.25% fall the previous day. 5% in 2 days for the Nasdaq. We saw the Dow down more than 500 points. I think that's over 1,000 points off this week. And we saw the S&P get belted 1.85%. So, of course, we saw Germany and France and the UK. We saw our own market here in Australia get absolutely poleaxed. And it is right down at the bottom again of the 2017 range low that we're in for 5 or 6 months, and also October's low. So we are at points where a circuit breaker needs to come in or things get really ugly. Now, the Russell 2000, which is the chart you can see on the screen as I'm doing this introduction, is for me leading the pack. This is where the US economy is, or where markets think the US economy is. This is approaching some support. Because what I want to say is we are looking at long time frame markets. Now, I always talk about 38.2% retracements as garden variety. We are getting close, but we are not there yet. 2,500 on the S&P 500. 62.50, I think, on the Nasdaq. And here in this Russell ETF, you can see that it's about 142.90. Just quickly around the grounds, the US dollar caught a bid last night. The Aussie's been belted down 1%. It doesn't like risk off, and it's acting like a risk off play. That's because people are worried about global growth now. Euro was down about 0.7, sterling down about 0.5%, Kiwi down about 0.7. The Canadian dollar got belted, 133 odd. It's lost 1% versus the US dollar. The Singapore dollar held in though. Oil collapsed. Copper was down 0.7. Gold was about the same in terms of flatness, off about 0.2. Let's dive straight in. I want to talk about this. Right. As you can see here, right, this is the IWM Russell 2000 ETF. What I've done is I've used it as an example of my Jimmy R. So you know how I use the 15 and 30 exponential moving averages. Where I got that was listening to a podcast of Michael Covell and Jimmy Rohrbach, an absolute god when it comes to market timing. And what Jimmy said, right at the end of that podcast, Michael asked Jimmy if there was one piece of advice, what would he give? Jimmy, that is. And Jimmy said, I'd just look at the weekly charts and have a look at the crossover of the 13 and the 50. Now, I've called it my Jimmy R in homage to him. What you find, now, all the way through that rally from 2011 to 2015, I wanted to be bearish. Many, many times I wanted to be bearish. The thing that kept me in the market, the thing that stopped me from being bearish was the Jimmy R. Weekly charts, that's all. Simple as that. All the other machinations worked around them. But I did not at any point get bearish, outright bearish. And so that's the key here. The Russell 2000 has crossed over. Now look at that for a run. That is one heck of a run. It's not perfect. You got short here, you got long there. You made a little bit of dough, but not a lot. You got short here, you got long there. You probably lost a bit of money. A couple of tranches there, then obviously back down here. The key thing is, for whatever reason, and I'm not mystical about charts and levels and all that kind of stuff, for whatever reason, this seems to capture big moves. Now, why am I talking about this today? I'm talking about this because the Nasdaq and the S&P are 1 week away from a crossover. So that's 1 week away from me saying, folks, the backdrop for stocks has materially got worse. Now, those of you who watch this all the time know that when this market funk started at the beginning of October, I said that it was about to start, and I wrote about that. Now, granted, this week, I was focused on the upside as long as last week's lows didn't break, but they did. Now what we're looking for is where they go next. So keep an eye on that in terms of that. But what I want to do is show you the dumb stat of the day. Dumb stat of the day, but it's going to turn up on a TV screen near you soon, I'm telling you. Right, this is odd stats. Here's a dumb cherry pick stat for you. In the past 20 years, if the S&P 500 has sold off at least 20% from an all-time high, it went on to sell off 50%. So, that'll be on your screens. The key thing, though, I'll get rid of that. We'll come back to it when we talk about the euro. The key thing, though, is that this market funkiness is getting extremely unsettling. Now, I've been accidentally closing things. But for me, right, so let's look at this. Look at this objectively. Let's not be bearish or bullish. Let's just look at the chart. What have we got? We've got, just on a fundamental basis, we've got waning's earning momentum, right? Not that earnings are going to fall, but the rate of change of earnings is going to fall. Now, why is that important? People feel change is not level. So as the rate of change changes, so that reflects in their expectation. So if a stock is fully priced and the rate of earnings momentum starts to slow, then you have to reprice. And that's kind of what happened in earnings season. So that said, what have we had? Right, we can forget this head and shoulders idea that we were floating. I was floating. Double top at 28.23. Remember, I talked about that. Had to get through there to get up. Hasn't happened. Now what do we got? We got 2600 has to hold. I'm not bearish per se. Haven't seen the Jimmy R. Haven't seen the break. But just like oil, right? Think about Greg McKenna's first ever system. I know I'm talking to third person, but I always call it that. Greg McKenna's first ever system. It was so long ago. It was back in the 90s. TradeStation, what a great machine TradeStation used to be. Anyway, so my first ever system was you get a move, you get a pullback between a 38.2% and sometimes a 61.8%. If it then took out the start, the high point or the low point, in this case the low point, then the next projection was the 38.2. So where does that leave you? That leaves you at 24.72 if 2600 breaks. Break and hold, obviously. So what I do with these breaks is 25% in on the break with a tight stop, a close, you go all in for the position size that I was looking for because you get a lot of intraday breaks and we're talking about long term. So you can see that 24.72. Now obviously that level there, which was the early 25.29 is going to be a magnet and everyone's going to be watching that closely. But you can see where that goes. So that's where we stand. No point getting uber bearish unless the low gives out. Then I'm talking about 24.75 to 2500. 2500 equates to that 142.90 I talked about on the Russell in terms of 38.2% of the big move from the start of the rally in 2016 when the China devaluation funk had finished. Similar story here, right? 61.50 is the 38.2. Now you can pretty much say that that's where I'm now targeting. Because on the dailies, we have made a new low. And so that what's going to happen is that tech is going to drag down the S&P and others. It's just a question of how far it drags them down. So that's the target for that. If I do a 38.2% on that, I think it's 62.50. Hang on, I'm just going to check Saturday's charts. What am I talking about? 62. I'm talking about NASDAQ, aren't I? Yeah, 6250. Yeah, that's right. 6250. 6250. That's right. All these numbers getting confused. Right. So you can see the backdrop has soured. In terms of our own stock market here in Australia, I know not all of you are viewers in Australia, but if I go to the weeklies there, if we take out the low, then we're talking about 54449. Now, if you think about it, as long as this 5585 to 5600 holds, the market's okay. But if it breaks, then there's another 150 odd points in the fall, but it could actually be deeper than that. You could say, I could look at that chart and say, well, maybe the actual target's here. Maybe that target of 5,000 odd is where we're headed. I hope not. And as I say, we're just watching the charts. If the lows break, then that's your projection. That's where we're headed. Now, speaking of breaking, where's that picture I had? Right. Italy is an issue. Last night, Ewald Nowotny, God, 9.5 minutes, I better get the skates on. Ewald Nowotny, who's a governing council member for the ECB, said there is no issue with Italian debt at the moment, but there may be. The FT, I think it was the FT, or was it CNBC? One of them, can't remember. It's in Markets Morning anyway, there's a link to it. Said that people are worried about the duration on Italian bonds and the fact that they can't roll anything long anymore, or at the moment. And what are we seeing here? We're seeing Italian 10s start to rise, and we're seeing the spread between Italian 10s and German 10s start to broaden again. That's an issue. That is what people are starting to focus on. That is one of the reasons why Euro is under pressure. So keep an eye on that. The Deputy Prime Minister said, oh no, we can sort things out. Right, what have we got? I can't make any sense of a chart that small. So what have we got? We've got a reversal. So I've got to be honest, feeling a bit like a feather duster rather than a rooster. And I know I use that sort of analogy all the time, but when I was at Westpac, when I first started trading in Melbourne, you know, back in, I think it was 1990 or 1991, I can't remember. One of the chief dealers used to say about you know, making a ham sandwich out of a handful of, and it wasn't rocks that I always write about in the Market Morning, and also used to say rooster feather duster thing, you know. Sometimes Barney, oh, you're a rooster, oh, Barney, you're a bit of a feather duster, that kind of stuff. So that was my nickname, by the way. You can't imagine why. Anyway, what have we got? That was pointing higher and has not got there. We have a bearish engulfing day. Now, there's been a lot of volatility at the moment. I've been talking about a US dollar move. Is it a time consolidation? So we form a high and we form a low and then we go sideways for a while? Or is it a price consolidation where US dollar goes to 115.15, 115.85, maybe even 117? On that basis, right there, right now, you would probably say 112, 115. If 115 breaks down, I'm talking about 115.85, and I'll start talking about, you know, 117 or something like that. But for the moment, I don't know the answer. Now, what does that mean from a trading perspective? It means I go flat. I don't have a clear view. If 115.50 breaks down, I'm in, right? If we get back down to 112.30 or something, and I get a signal to buy, then I'll be back in. But as it stands at the moment, I don't have a clear view. And so for me, that puts me out a little bit. In terms of dollar yen, I would have thought, fundamentally, based on 5% off in the NASDAQ, based on, 3.5%, I guess, in the S&P, over a 2-day period, that currency, dollar yen, should be lower. Instead, it's not. Bullish engulfing. When you get bullish and bearish engulfing in a lot of different things, you know that there's one thing driving, and that's US dollar. Why? US 10s are at 306 still. Why are they not at 298? Why are they not at 293? They should be. Durable goods tonight might change that. See if it holds up. But I would have guessed, based on the relationship as a risk hedge, dollar yen should have been lower. It is not. What does that tell me? Well, it doesn't tell me anything yet. Tells me something's not working the way that it should. But why would something not work the way that it should? It would work the way that it should because people aren't doing what they did in the past. Will it revert tomorrow? Of course it could. But for the moment, the hypothesis might be that people are just going flat. They're just going, dunno, I'm out, see you later, I'm out. That could be it. That would be reasonable. That is my sense right now. I don't want to take a trade right now unless there is a compelling reason to trade. If I had access to options, which I don't at the moment, but I will when Smart Markets gets their option book going in the new year, I would have options. And options trading would be what I would be doing now. 6 months, pay the theta, pay the time, trade the levels, and then use the convexity. Because day-to-day movements right at the moment are fractious. They're all over the place without a clear signal. If, on the other hand, we see Euro close below last week's low, and DXY above last week's high, that's going to tell me the US dollar is about to surge, and then I'll dive straight back in. Probably. We'll see. This is a stream of consciousness. Sterling is exactly the same. You know, you got 126.60 on the bottom side. You got 133 on the top side. You're inside that range. Mrs. May's winning. Have a look at Markets Morning. I know that's a contentious thing, but I think she's winning. I don't think those guys and girls who want to topple her have got the numbers. They're certainly not acting like they are. And in yesterday's post, my morning newsletter, I noted that they'd gone back to their constituencies, or at least reports are, they'd gone back to their constituents and the constituents have said, what the heck? Are you trying to blow us all up? And unlike Australian politicians who go, we don't care about our constituents, the Pommy politicians are listening, with due respect to all my Pommy viewers. So anyway, still, you can't really trade that at the moment, but an option, I'd probably be along the call. If I had to have a bet on that, I'd be along the call. I think Mrs. May's winning. Aussie, broken, trendline, ugliness, reversal, Greg's 74.40. Where's that hook? Exit stage left, pull him off, get him off. Right. I bought some Aussie last night. Not so good at the moment. I'm going to have a look at it today. If I have a look at it there, it looks to me like I've done the wrong thing. I bought it in front of the trend line. The trend line's broken, so therefore I should cut it. So I'll have a look at that today. It does look like it needs to hold 71, not the Bollinger Band. Needs to hold 71.80 anyway. That's the key level for me on the dailies. In terms of dollar CAD, everything's moved around, folks. I'm sorry about this because I keep accidentally closing. Right now, I was not on this. This is the trend line I should have bought, not the Australian dollar trend line. So now we've seen the break. We get the target of the 133. Didn't look like it was going to get there, but then it's bounced off this trend line. Now, why did it? Of course, it did it because of oil, but I wasn't on that one. 131.18. If dollar CAD keeps rising and dollar Sing can start to catch up, dollar Sing's now down here because I accidentally closed it yesterday. If dollar Sing can get up and through, sorry, just trying to bring that, can get up and through, say, 137.75, the US dollar outlook might really and materially be changing, but we've got to keep an eye on that. The Kiwi or dollar yuan, part of what's going on is these tiny little moves higher in the yuan. People are focused on that. That's helping the US dollar. And the Kiwi, Kiwi's up here now. An ugly reversal. This is what it's what I said the other day. When things go vertical, I don't like them, and that's that. I got to be honest, folks. When they go straight up, I don't like them. When they go straight down, I don't like them. And that's actually a sell signal on the daily MACD. Where's the stochastic? Is the stochastic above 70? Yes, it is. That is a genuine, systematic sell signal for me for the Kiwi. How far it goes, I'm not sure. Maybe 67.49, which isn't that far away, and maybe even 66.91, 99. So we'll see, 67 cents. Right, I've done stocks, haven't I? Did I do the DAX? I didn't do the DAX, did I? I don't think I did the DAX. Don't even know where the DAX is now. There we go. Right, let's do the DAX. Right, back here. Look at it on the weeklies. I've got 11,000, right? We're there now. And then 10,000. I've got 10,000 penciled in every weekend when I write to myself in my daily, my weekly, screen. I write 11,000 then 10,000. So 10,000 is the medium-term target for the DAX. Now, gold should be higher. Sorry, one of my machines just went off. Should be higher. It is not. No compelling reason to do anything there. I'm not going to do anything. Close above 12.38, get bullish. 12.38. Come back down to 1200 to 1204. Probably look to buy it as long as it holds above 11.95. Silver, which has moved up here now, just inside the range. Nothing in the middle of the range. Copper, reverse. Where is copper now? There it is. Look at that. Reversing off that wedge. Still within the wedge though. Either side of the parameters are reasonable places to trade. Now, WTI and Brent, my goodness. This is the weekly chart. So 51.45. So I think I mentioned this on Monday. But the CFTC data released on Friday showed that even though we had a big fall last week on Monday and Tuesday, that the total spec positions in crude oil only dropped from 400 odd to 380 odd. That's a lot of positions still to be liquidated. Did we see that last night? I'm not sure. 51.5 is a reasonable support level. Otherwise, we're going to 45. It's as simple as that. What's happened fundamentally? President Trump has said that he loves the Saudis, that Mohammed bin Salman wasn't part of it, or we may never know. And then he's also apparently said that he wants oil lower. Quid pro quo. Maybe the Saudi king will not let his oil minister, Khalid al-Falih, tighten the market in the manner that all of us thought. Anyway, was last night the capitulation event? I'm not sure. I'm going to have a look at the open interest at some point during the day, and I'll report back in tomorrow's video. But $60. Did I talk about that yesterday? Because I know I've got it written in my weekly scan. That weekly scan, it's the best thing I do, and it takes me 6 or 8 hours on a Saturday, but it's still the key thing. All right, and of course, last but not least, where is Bitcoin? There it is. All right. So 3,000 on this one. There's lots of different lines. You haven't seen that chart for a while. I haven't seen it for a while either. Let's go to the other one. 873 in the medium term. So let's just say it's going to $1,000 in the medium term, and short term it's 3,472. So 3,471, 3,472 roughly. And don't be too precious because spreads are as wide as a Mack truck anyway, but that's where they're going. Anyway, that's it from me. Westpac leading index today. Not much else out really. Nothing to worry about. Durable goods tonight is going to be massive. Massive, 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 massive. Weak or strong, durable goods is a market mover potentially today. Anyway, I'll be back tomorrow. Lots to do. I'm just not trading unless I have to, unless I get a clear signal. That Kiwi was a clear signal. I'll talk to you later. Bye for now.